All right, so let's talk a little bit more about 6-4, and then we'll go into some Chapter 7 stuff. So we are in Module 8. We're doing 6-4. So let's open a new tab. There it is. All right, well, let me ask if you have any questions, any particular questions you want me to go over, types of questions. Any that you're working on that you're like, I just don't know what to do about this. I've got Kaylee and then Garrett.
There's one, it's like, there's 3 things in the box.
Okay.
And then, do you know what I'm talking about?
I can see it in my head.
Boxes, tables.
Yeah. Let's see.
It's a multiple choice.
Yeah. Let's hunt for one. Let's see if it fits the bill. Okay, like this one? Okay. Does this one work, you think?
Yeah.
Okay, great. All right, so let's go through this whole problem here. So it's asking, first of all, I'll look at the question stem. Using the FIFO method, how much is the direct materials cost of units completed and transferred out? Okay, so I'll bring up mine. Okay, that means we need to figure out direct materials with this period's rate. We need to put some sort of cost of that and add in at the end the direct materials cost that was in beginning WIP. All right, so that's given to me. Great. Also, a rate is given to me and the total completed units. Now, the temptation will be to just take the rate times the completed units, just like you would in weighted average, and stop there. That would literally be all we would do if this said using the weighted average method. But with the FIFO method, at the very beginning of the process, we kept this number out of the numerator when we developed this rate of $12.77 of direct materials cost per equivalent unit. And we kept the equivalent units of direct materials, which is this 150 times 0.8 from this sentence, out of the denominator when we created the rate. It's not in total equivalent units. We subtracted that away. So we have to make sure that we multiply this rate by the right amount of this 15,000. It's not going to be by the whole 15,000. Some of this 15,000 completed units are equivalent units that we did with last period's work. So step 1 here, let's tee it up. So this is the 3-box question, just for fun. Direct materials, units completed. Okay, so we have DM beginning WIP of 1250. We have numlock 1250, and then we have a DM rate. Here we'll call it DM cost per equivalent unit, and that is $12.77. Nope, $12.77. And then we have our completed units of 15,000. And also from this paragraph here, let's grab both of those. 150, that's beginning WIP physical units. And they are 80% complete. That is their percent complete with respect to direct materials. Some people slashes here sometimes. Okay, so we can figure out beginning WIP equivalent units. 80% of the 150 units. So these 150 units are 80% complete. If we mashed them all together and did that amount of work, but just on units that were entirely complete, we would end up with 120 complete units. That's the idea. Going back to 4 or 5 weeks ago when we first started talking about equivalent units. And we take the total completed units and subtract away those beginning WIP equivalent units because it wasn't work done with this period's rate. This wasn't done this period, so we're not going to charge this period's direct materials cost to that work. So we only have 14,880 equivalent units completed with this period's work. And that's what we can charge with this period's rate. So we take that number, multiply this period's rate by that number. And that is a very tempting option right here, but wrong. It's not yet complete. We're not yet done with the process, I mean. And that is the cost of this period's work. I think that's a good way to say it. And then we make sure we add in at the end the direct materials beginning WIP cost. I'll label it as such. Now that is the total, no, that is the direct materials cost of units completed. So the idea is we have 15,000 units completed, that's true. 120 effectively of those units were completed last period. That's the equivalent units of beginning WIP work that they carried in from last period. So that means that $12.50 is going to be included in this. And then we have the rest of it, which is 14,880, that was completed at this rate right here. And so we add that part in, and we get this total number down here. So I just restated it one more time. Now, the opposite way. I've always said, well, at the very end, add in beginning WIP costs. I just said that first this time. If that sounded more confusing to you. So that should be the right answer there. Does that work, Haley? Yeah. Okay, no problem. All right. Garrett, did you want the box questions too? No, okay, different one. Okay. Let's try and find a conversion cost in ending WIP. Oh, here's one. Does yours provide the rates? Okay, let's try and find one that matches yours a little bit better. Okay, we'll make sure we got this one. The 3 boxes one, right? Yeah, there it is. Got the points. So I'm getting a lot of rate provided ones. Not. See, this is no. Let's keep going. Conversion cost, but the rate is provided. Almost. We're getting close. So this time we have to get it right. That's how probability works. That's what I tell myself every time, Lucky sevens. I'm being sarcastic. Please don't do that. You'll lose all your money. All right, keep going. We'll get it. It's hiding from me. Wow, we didn't even get any ending WIP this time. Right. Oh, the rate is provided. We're so close. Second bottom. So I think what I'll do is I'll do this problem here, and just the part that does conversion costs will be what's relevant to your problem. Okay, so this is a total cost of ending WIP problem without any rates provided. So since there aren't any rates, there's no bullet point that says this is the total equivalent units. We know we're going to have to do all 3 steps of the process. Luckily, we also know step 3 is the ending WIP step. So the ending work in process step is the easier of the 2. So we can get some solace in that. The downside is this question, unlike what you're asking for, is phrased as total cost. We'll need to include both a direct materials portion and a conversion cost portion. All right, so we did ending WIP, total cost question, open answer question. I'll put in this as MCQ, multiple choice question. All right, so let's let's have it like this. This is going to be our T account. We have beginning WIP of 208. They are 31% complete with respect to conversion costs, just copying down from the first bullet point here. And based on this, 100% complete with respect to direct materials. Since all direct materials are added at the very beginning of the process, then all 208 of these units that are in process have to have had all their direct materials, or at least that is our assumption as a business. We started 7,868 units, and we have 149 units in ending work in process that are 58% complete with respect to conversion costs. And again, because of the highlighted, still highlighted sentence up here, they are 100% complete with respect to direct materials. Let's go a little further down. Okay, and we can do units completed first of all. That's beginning WIP plus units started minus ending WIP. And since I love some shortcuts, all direct materials are added at the very beginning of the process. So by dint of the algebra, our TEU with respect to direct materials is the same as units units started. Thank you. Yeah, first try, we got it. Okay, yeah, and it's units started. So I know I can go through the calculations, sure, but I also, since I know this is that special case, say all direct materials are at the very beginning of the process, that the beginning WIP and ending WIP will cancel themselves out given how we have to calculate TEU. So it's going to equal the same as units started. So we have direct materials TEU, and I'm just going to use that simplification. And what we can, after the problem, we can go over the algebra one more time. Maybe I went very quickly through it earlier when I went through it. Now we need to calculate conversion cost TEU, or TEU with respect to conversion costs. And so let's define that here. TEU equals units completed minus beginning WIP equivalent units plus ending WIP equivalent units. So I'm just going to follow that calculation. We have units completed minus beginning WIP equivalent units, so not the 208, but the 208 times the 31% here, plus ending WIP equivalent units, so the 149 times its percent complete with respect to conversion costs, the 0.58 there. Okay, and now we have the conversion cost TE, that's going to be the denominator for our rate. All right, so we don't, because it's FIFO, these are the first in costs, and they get their own special HOV lane. That's what he said in the book. I don't think I've used that mnemonic as much, but their own, maybe it'll help to remind you of it. Their own special HOV lane directly to the costs of units completed and transferred out. So we're not going to include those beginning up costs in our rate. So ignore those numbers. In fact, for the entirety of this problem, we ignore those numbers because it's not asking for costs of units completed and transferred out. When we are calculating the rate, we only include the current period costs with FIFO. So we have 12,638 for direct materials, current period cost. And we have 10,209 for conversion cost, current period cost. And yeah, that doubles cost and whatever. Okay. And now we can take the numerator of current period cost, divide it by our TEU for both of these, and we get our rates. This is our DM rate, our CC rate, which is DM cost per equivalent units, and conversion cost per equivalent units. Okay, that's just the numerator of the dollar amount for current period costs of that category divided by the TEU for that category. Now, it's a pretty simple matter now. We need to cancel out that equivalent units from the bottom of the rate of each of these rates. And so we need to multiply it by an equivalent unit number. So the equivalent units of ending work in process with respect to direct materials is this 149 times 1, which just equals 149. And the ending WIP equivalent units with respect to conversion costs is that 149 times the 0.58. And we can multiply our respective rates by those amounts and get the dollar amounts in ending work in process. So I'm taking the DM rate here times the ending web equivalent units for direct materials. And so there are $239.33 of direct materials cost in ending work in process. I can do the same thing. I'll copy it down. Take the CC rate, the conversion cost rate, multiply it by the ending web equivalent units with respect to conversion costs, and I end up with $110.99 of conversion cost in ending work in process. And so just these cells would be relevant if we're just doing conversion costs. Calculating conversion cost TEU, which requires us to multiply it by the percent complete. The conversion costs, the current period conversion costs, using those to create the rate, and then multiplying that by the ending web equivalent units with respect to conversion costs. And that would get us the conversion cost in ending web, if that's the question we were answering. This one's asking for the total, so we can sum those. Total cost of ending work in process. How's that feeling? Okay? Is that all right, Garrett? He says, you want me to go back over? Mm-hmm. Okay. The total cost in ending work in process? This kind of question, or this exact question, or this kind of question? Okay. What did the other one have? Let's see. The other one had a much bigger table. It gave us beginning WIP cost and equivalent units in beginning WIP. And this one does not give us that. Yep. Yeah, any cells you want to see on this one before we move up too far away from it? The open answer one we just finished. Is that all right, Elton?
Yeah. I feel like I got 7, 3, 18.
Well.
So you take the units completed and you add any subtract from the beginning.
Yep. Is that matching what you did, or did you get those flipped somehow? You got the same units completed though, right? We can start with that being 7927. Let's see.
So I'm getting this here.
Mm-hmm.
That's the formula I used. So I'm subtracting that times 0.31, then adding.
Wait.
I feel like I have what you have though.
It does look like it. Subtracting 0.31 times 208. Plus 0.58 times 149. I'm not. That's really it. Let me look back at this real quick. Wait, do you have 7297 or 7927? Did we flip those around?
Okay.
Is that what it is?
Yeah.
Okay, good. I was losing my mind there. Yeah. No, I was like, I can't see the problem. But yeah, it just got flipped around. Okay. Price company. All right, so this question right here, this is a good one to go over then? Okay. All right, so we're looking for the total cost of ending work in process. And we don't have, I didn't tempt you with the option of we cannot complete it, which you might be tempted to, especially if you see, oh, there are other price company questions. They give us more information. Missed opportunity for me, you know. But all right, they produce grape juice in a continuous process. The company employs a FIFO process costing system. You know, this seems like a good fit for process costing. We've got grape juice we're producing. We're not going to name each gallon of grape juice, and you know, it's all the same, or it should be all the same if our quality control is good. Data concerning activity in January, the company is given below. All right, so we have our equivalent units in ending WIP with respect to direct materials and conversion costs, and we have our rates with respect to direct materials and conversion costs. And quite frankly, that I think it's just that simple. We can multiply these two and then add them together. We're just looking, this is a good red herring here to throw you off potentially. So this is the price, company, total EWIP cost. And we have our DM and CC. We have 4,000 and 3,000, and $15 is the rate for that. $4.50 is the rate for that. So we can just take those. This is ending WIP equivalent units. The professor was so nice, already did equivalent units for you, and these are the respective rates. So there should be $60,000 of direct materials in ending work in process here, because we have 4,000 equivalent units times the rate of $15 gives us $60,000. Likewise, there should be $13,500 of conversion costs in ending work in process, because we have 3,000 equivalent units of ending WIP times the rate of $4.50 gives us $13,500. And then you add those together, you get $73,500. So that should be the right answer there. Is that all right, Hannah? Good. Yeah, I won't be surprised if this question I was thinking about a similar question the other day. This is the same procedure if you were doing it with weighted average as well. So I won't be surprised if during the review quiz, and hopefully not on the final, you come up and there are flags going up like, it says FIFO, there must be something else I need to do with this. No, really, we're just looking to get that rate into straight up dollars. So it's some dollar amount over equivalent units is the rate. Just multiply it by the ending WIP equivalent units, and you end up with the dollars and ending WIP. Take the terms and kind of do some algebra with them. Hopefully that helps remind you of the procedure for that one. And let me just one more time remind you of why a second ago FIFO DM can equal units started, TEU units started. TEU equals units completed minus beginning WIP equivalent units plus ending WIP equivalent units. And units completed, every time we do that cell, it's beginning WIP physical units plus units started minus ending WIP physical units. Then what TEU equals, when it's set all together, we can take these terms right here and replace them with units completed. Beginning WIP physical units plus units, I'm going to abbreviate it, units started, minus ending WIP physical units. Okay, that's just units completed rewritten, minus beginning WIP equivalent units plus ending WIP equivalent units. And we couldn't do anything with this under normal circumstances, but if direct materials are at the very beginning, then the direct materials physical units are equal to the direct materials equivalent units. And so we can replace this with beginning WIP equivalent units because it's equal to the same thing. And we replace this with ending WIP equivalent units. And we can say, oh, we have beginning WIP equivalent units. We're subtracting that same amount away. This is going to equal 0. And with ending WIP equivalent units being subtracted and we add it back, that also will equal 0. So all that's left is units started. That's the trick. If direct materials are added at the very beginning of the process, then the total equivalent units for direct materials under FIFO only, not under weighted average, but under FIFO, just becomes units started. Okay, what other questions do we want to go over? Yeah.
What if it's like, what if direct materials aren't added till 50%, but neither are 50%? Would it still be units started?
No, only when all direct materials. The real rule is when direct materials are 100% complete, and they're always 100% complete when they're added at the very beginning of the process. And if they're both past the threshold, then they're 100% complete. So, if you said specifically, if it's a kind of dumpling problem, direct materials are added like at 50% or wherever in the middle, and neither one is past that, then no, it's equal to direct materials equivalent units for beginning WIP is still 0 because nothing's been added yet, hasn't crossed the conversion cost % complete threshold, and direct materials equivalent units with in ending WIP is also 0 because it also hasn't passed the threshold. And so we can't do that replacement of beginning WIP physical units with beginning WIP equivalent units. There are some physical units in beginning WIP, but for direct materials, their equivalent units is 0. It's not. We can't plug it in. So the algebra would work. Yes. Then it would. Then you could use a different trick, which is if neither one's past the threshold, then this is 0 and this is 0, and so it's just units completed. Yes. Yeah. Hey, if that works for. In fact, with direct materials dumpling problems, often in the dumpling problems, the way I ask them, they'll either both be incomplete, not past the threshold, or they'll both be past the threshold, beginning WIP and ending WIP. And so, given that additional assumption, yes, direct materials TEU will just alternate between units completed and units started, one or the other, depending on whether it's past the threshold or not. But it's just because I tend to do that with the problems. I usually don't make one before the threshold and the other after the threshold, which, I don't know, it's just me. Sorry, I was a tangent off of what you said. Did I answer your question all right? Okay, good. Right. Yeah, Claire. Sure. All right. So the Aniquilado company uses process costing and it has several production departments. Aniquilado uses the FIFO method. In the firm's first production department, all direct materials are added when the units are 50% complete with respect to conversion costs. All right. So it's a dumpling problem. Also, this really hasn't played a role a lot in what we do, but I've given you a picture of where we are, the first production department. So we're starting the process. We're not going to have any transferred in costs from previous department. We're the first one. That's why we can get away with just these two categories of cost. And most of the problems we tend to do that. Anyway, it's a dumpling problem. So all direct materials are going to be added right at the point where the units are 50% complete with respect to conversion costs. And we have the following information here. Oh, look, I violated my own rule. I have beginning WIP, which has crossed the threshold. So these are 100% complete with respect to direct materials. And ending WIP has not crossed that 50% threshold, so they're 0% complete with respect to direct materials. And we have units completed already given to us, 150,000. All right, so let's start writing down this problem here. This is and we're asking total cost of units completed, and it's a multiple choice question. All right, so we have our beginning whip units, 5,000 of them. And I'll organize it this way. I'll say beginning whip equivalent units with respect to direct materials, beginning whip equivalent units with respect to conversion costs. Let me do one little addition here. We have 1.75. All right, so I'm organizing a little differently than I often do. Maybe I shouldn't, but I don't have to solve for units completed, so I didn't feel like I need to build a T account. Maybe that's not the right way to go, but this is what I'm doing. All right, so since they're past the 50% threshold, these 5,000 units are 100% complete with respect to conversion to direct materials. 100% complete with respect to direct materials. And we can use the conversion cost percent complete right here, 75% complete. So there are 3,750 equivalent units in beginning whip for conversion costs. All right, let's get our, I don't need to do ending whip equivalent units. I don't need to because I was already given the rate. I need these because I'm going to have to subtract them away from the units completed. We have 150,000 units completed, but some of those units completed are work we did last period. 5,000 equivalent units worth for direct materials and 3,750 equivalent units worth for conversion costs. So we need to subtract those away from this 150,000 before we multiply the units completed by these rates. So let's get equivalent units completed with this period's DM work, and then equivalent units completed with this period's conversion cost work. And here's our units completed of 150,000. And we take that 150,000, we subtract away the equivalent units in beginning whip for the two cost categories. So now these are the numbers now we need to multiply these rates by. Let's go. So we have our rates of 50, 75. Multiply, this is our DM rate, CC rate. So we can multiply each one by its respective rate. So we have 145,000 equivalent units worth of work we did this period at $50 direct materials cost per equivalent unit. That means we incurred $7,250,000 of direct materials cost to complete the units we did with this period's work. And likewise, we can take the 146,250 equivalent units we completed with this period's work with regard to conversion cost times the conversion cost per equivalent unit of $75 rate, and we end up with $10,968,750 of conversion cost for this period's work. And then the last step, we need to make sure we include those beginning whip costs right here. So we figured out what this period's work was, and now we need to add in the work we did last period for these two categories, these two numbers of equivalent units. We did some direct materials work to get these 5,000 equivalent units worth of work by the end of last period, beginning of this period, and we did 3,750's equivalent units worth of work with respect to conversion costs. Now I've summed them here. I don't know how much of this is direct materials and how much of this is conversion cost. And so what I'm going to do is I'm going to sum, first of all, these two, and then add in the 505 from the problem over here. So this is total cost for this period's work. And that's beginning whip cost, which is technically last period's work. So that should be the right answer there. Does that look okay? Any cells we want to see? Yeah, Dylan?
I just want to check for the equivalent units completed this period, that's just our units completed minus our beginning work equivalent.
Yes, it is. Yep, exactly.
And the TEU would be units completed minus beginning work equivalent plus the end of work.
Yes, exactly. Yeah. Yeah.
I have another question similar to that one, but it's asking for the ending with balance.
Okay. Good. Claire, this look good? Sorry. All right. Good. Okay. With the same company name.
Yeah.
Okay. Let's see if we can find another one of these. Let's submit. We did 3 questions, one of which was open answer. So we should have 10 points, I think. If we got them all right. Yeah, good. All right, let's try to find your question. Okay, is this good? Okay. So we have a similar situation in terms of what information I give you. One thing is different. Looks like all direct materials are added at the beginning of the process. This isn't one of those where there's a threshold and before it's 0 and after it's 100% for direct materials. Also, it doesn't say total, but it is asking for the ending WIP balance, which means we're talking about the total amount of costs in that T account. So that would include conversion costs and direct materials. We only split them up because we're going to have different percents complete. In the accounting, in the actual dollar amounts we put in there, the ending balance will include both those numbers, of course. And we're going to take a different tack here. We actually don't need to worry about these two, which were the only two we had to worry about earlier. We only need to worry about this one. This bullet point, if there were bullet points. This line right here. Because we have equivalent unit rates given to us. The same ones, actually, $50 and $75. And we're asking to get so that's dollar amount over ending, or equivalent units right here. And we're trying to get the dollar amount in ending WIP, so we need to multiply by the ending WIP equivalent units. Nowhere in that process is beginning WIP or units completed or units started or any of those things. So we can just have the 2 rates and our ending WIP information and be able to solve this problem. Assuming the rates are given to us, which they are in this problem. If we had to complete the rates as well, then we'd need all the information. If we had to figure out DEU and the rates, but no, we're already past that. All right, so this one is same name, but total cost ending WIP. Okay, so we have 10,000 units. That's ending WIP physical units. And again, they're 100% complete with respect to direct materials. So I'm going to embed it in the cell just to save some time. Ending WIP equivalent units for direct materials. And they are 40% complete. So I'm going to put 0.4 in the cell with respect to conversion costs. Ending WIP equivalent units for conversion costs is 4,000. That's 10,000 units, but 40% complete. If we had concentrated all those 10,000 units worth of effort at 40% complete down to just completed units and completed all the units that we started with that same amount of work, we would have 4,000 units. Yeah, that's slightly different wording. Yep.
So if it says the started one is 50% complete, but the ending one is 40% complete, would the ending would the end be 0?
Exactly. Yes. Yeah. We'd have this right here. It'd be that 10,000 or whatever the ending WIP number physical units is times 0% complete. No. As far as DM is concerned, they have no direct materials added to them. So we're going to put no cost there if that were the case. Is that what the question you're looking at says? Yeah. So we'll move forward with the way this is phrased, but just you have 0 there for the ending WIP equivalent units for direct materials. All right, so we've got our rates of 50 and 75, DM rate, CC rate, and we can multiply them by the respective equivalent units in ending WIP for the 2, which would be 0 for direct materials in your case. But here it's 10,000 because they're 100% complete. So DM cost in ending WIP and CC in ending WIP, conversion cost in ending WIP. And it's asking for the total of those, so we're going to sum those up, 8,000. And yeah, I didn't have a lot of imagination in doing the distractors for this problem. If you could have one number or the other number, And I might have just made up 1.25 million. I'm not sure what that's from. Sound like a good number. Is that look good? Yeah. Okay. You're welcome. What else do we have? You guys gonna miss process costing? No. I see some nodded heads. Some people will. Stockholm syndrome has set in. We've come to love it. Okay, maybe some of you haven't yet. Ooh. There's still hope. All right. Pause one more time here, in case you really want to ask about that one multiple choice question or open answer question. All right. And this is when I tell you that I'm out of town before. No, I'm just kidding. I'm still available by email today and tomorrow before the due date. Sorry, I didn't complete the joke, so it didn't make sense. But so if you have questions or they come up between now and the due date of end day tomorrow, then yeah, feel free to reach out. Let's see how many we answered. We just won. Okay, let's see. We should get 2.5 points. Let's make sure we got that right. 2.5. Yeah, you might not believe it, but sometimes I do make mistakes. You know, I know. Big shock. All right, so I'm going to jump over to the next module. And some of us are like, wait, not yet. Okay, we got 2 more modules before spring break. Chapter 7, we're going to go over all of Chapter 7 here. Now, I split up Chapter 7 in a way that to me makes logical sense, and I hope it makes enough sense to you too. So the first module, kind of like Chapter 5. The first module is probably more overlap with what you already know about variance analysis and standard costing. And the second module, which is module 10 down here, is likely to have a little bit more beyond what you have covered before. I think it's unlikely that in the intro class you would have covered mix and yield variances. If so, great. We'll get extra practice on that. So let's start talking about variance analysis. All right, I took this picture myself. I thought it was pretty funny. They're hiring pumpkin spice smoothies. You know, I'm not sure what their customer service is like. I hear they're pretty cool customers, you know. 2 for $5. That's also a pretty cheap labor rate there. Taco Time is not going to be automating with robots anytime soon. They've got pumpkin spice smoothies they're hiring. So, actually, let me look up real quick a website. I should have had this before. It's an illustration that I want specifically. All right. So, maaw.info is in some ways some of the inspiration for the open cost accounting website. So send your hate mail to Professor Martin. He's an emeritus professor, which means he won't care. He'll get your email and be like, I'm not being paid to care about students, much less his students, not mine. He might. Nice person when I've communicated with him. But he has some of these illustrations that I think, you know what, this is really good. So there are different questions that you're going to want to answer when you're deciding what kind of costing system to put together as a firm. Why would you put a cost system together? So you can measure your costs and decide how much those costs balance against your revenues so you can figure out profitability, so you make profitable decisions because you're a for-profit firm. Or because you're a not-for-profit that wants to maximize the amount of money you can put towards the mission. Anyway, you're going to measure costs, and there are 5 different questions you can answer. One is the input measurement basis, pure historical, normal historical, and standard. And this is where the word standard for standard costs comes from. We'll come back to that in a second. And then inventory evaluation method. Okay, so let me go back. No, we'll just read through them. It's fine. You could have throughput valuation, direct, or also called variable cost evaluation, full absorption, and activity-based. This is what is considered inventoriable cost, a product cost or manufacturing cost. Remember on activity-based costing, when I put the rectangle, it wasn't the rectangle with the 2 dashed lines like there was in chapter 4. It was a rectangle with 1 dashed line and a bunch of Swiss cheese lines and circles and whatever. That's because different things were considered product costs that are activity-based compared to the typical full absorption style. And there are 2 more, which we'll talk about in chapter 8, what you could consider an inventory cost. Cost accumulation method, where we're going to accumulate costs. Where do we want our line of sight? Where's our focus? When I did that weird thing where I put my hand up and was in focus and the board wasn't in focus at the camera, where do we want the line of sight to be? Because we need information at that area. Do we want it at the job or order level? Because each job and order is specific. Do we want it at the process level? Because that's really where the variation happens. Below the process level, there's not much variation between products. Do we want it backflush, which is what we'll cover in chapter 8. We'll cover this idea, which the punchline is we accumulate costs at cost of goods sold and only backflush inventory costs at the end to make the system even simpler than it would be otherwise. That's a lean way of doing it. Or some hybrid, which usually is a hybrid between some job order or process costing. Sometimes people call that operation costing. The fourth question we can answer is cost flow assumption. We can specifically identify where the costs are, what units hold their costs through. Well, this Lambo over here costs us this much, and we're going to track very carefully how much it costs because it's a high-ticket item, and track its costs all the way through. Or we can have a bunch of cars going through the assembly line, and we're going to decide on a FIFO, or he didn't include LIFO. It's there for financial accounting, but a lot of times it's not considered useful from a managerial accounting point of view. You got FIFO, first in, first out. We're going to just assume that the first stuff in is the first stuff out, and kind of that's all we're going to worry about as far as cost flow assumption. Or you could weighted average things to now. You could put weighted average in there, which we just covered. So we just covered those 2 ideas in a process costing setting, different cost flow assumptions. And last is the recording interval capability. So we decide whether we're going to have a perpetual system where at the end of the month we true things up, or, I said that backwards. A periodic system where at the end of the month we true things up and figure out where everything is, which is largely how we have conducted the process costing questions. Or a perpetual where the balances are constantly being updated every time there is a transaction in the system. All right, we don't cover much of this difference here, except we've assumed periodic in all of our process costing questions, and it also is assumed in chapter 8 when we get to that. Let's go back to this first question. Input measurement basis. That is, what number do we input in terms of cost? So pure historical means literally what happened. Oh, we spent $2.50 on that thing. So we're going to put in the accounting system $2.50. Historical record. And you're like, wait, if we don't put that, aren't we lying? Isn't that bad in accounting? Yes. Technically. Okay, teasing a little bit there. But it's not like we don't record the $2.50 otherwise. We could record it all together in pure historical. Actually, he has a better illustration of this, going a little further down the line. I remember the picture here. All right, so here's pure historical. We take whatever it is, direct materials, direct labor, or overhead, and put the actual amount and record it in inventory. We can do what's in chapter 4, if you reviewed that, or if you remember from job order costing, the traditional, normal historical, sometimes it's called normal. You have normal absorption costing is often what's called a traditional absorption costing, which is this. Direct materials and direct labor are recorded at the actual amount you paid for them, but overhead we apply based on some PDOH, and then any excess is recorded as an overhead variance. We have closing out the management overhead control account. That's when you get the control account. We don't go over that directly in the class. I just assume it's carried forward. It's easy enough that I think you could remember it well enough if you had to. Standard, we take that paradigm and apply it to everything. We say, well, we have a standard rate in this company. Direct materials cost us $1 per unit. We're not saying they actually do. We're saying this is our standard. The standard is $1 per unit. And in this company here, we do $10 per direct labor unit. That's the standard. Now, there will be fluctuations in reality, but we're going to take those fluctuations and carve them out and put them into the variance accounts. And we're going to record in our work in process. Let's say we used, here, let's say these are our standards. And I'll move this further down. And our actual cost was $1.50 of direct materials. We just did one unit of direct materials. And it was actually $12 for direct labor. So we only use 1 hour direct labor. Under a full standard costing system, you would record $11 as the debit, because you record $1 is the standard for direct materials and $10 is the standard for direct labor. We use 1 unit of direct materials, 1 hour direct labor, that we're going to record as if that costs us $11. And then we have our variance accounts over here, where we're going to record the difference, 50 cents in this case. This is a DM variance. And a DL variance account over here. We'll record the $2 difference between standard and actual over here. Okay, so that's what it gets at. And it's called standard costing, and you're like, well, that means it's like job order and process and activity based. But in reality, it's answering a very different question. So that's why I phrased this chapter as variance analysis instead of calling it standard costing. I want to frighten you with the chapter title. Now, this chapter, I like the theory of it a lot. And so maybe that's why I ramble on and on and on about it at the beginning. I think it's important to get. I do think it's important to understand because these are the traditional variances that we cover here in the class, direct materials, direct labor, and overhead. But I remember when I was working out in practice, we did variances over all sorts of things. And if you understand the principles of how variance works and what it's supposed to be doing, then you can properly construct those variances. Because they might be about all sorts of expectations and how you've deviated from those expectations. The other reason I care a lot about the theory is because it's because it deals with the other part of my job that I do here. I do research. And so basically, variance analysis is your opportunity to be a scientist in your own firm. Little beakers and lab coat. You can dress all up when it's variance analysis day. They'll look at you weird, but you can do that if you want to. The idea is we're trying to figure out a theory for the firm. We're trying to figure out what is the firm doing and how can it do better. The chapters 2, 3, 4, 5, and 6 deal with measuring profit currently, like how profitable are we right now. Chapter 7 has more of a temporal aspect to it as far as time goes. So how can we do better in the future? So if I want to know how I could do better in the future, I need to know what's going well and what's going poorly right now. I need to know the cause of those things. And variance analysis is about drilling down to the root causes. At the end of the day, you want to compare actual results versus expectations as a way to suggest a specific action. Or if I could phrase it only slightly differently, if I could disagree with the author just ever so slightly, I would say that gets you a question or two away from a specific action. So for example, let's up these numbers first of all. And let's say we had $12 million in variance of cost in direct labor, leading to a $2 million direct labor variance, an unfavorable one. That is to say, we spent $12 million more of direct labor cost. We spent $12 million in direct labor costs. We were expecting, based on our budget, based on everything else, to only pay $10 million in direct labor costs. Okay, is it better to spend $10 million or $12 million, all things being equal? 10. Thank you passed the test. Good. Okay, all things being equal is important, of course, because if you spent zero on labor costs or you spent labor costs on people who didn't know what they were doing and they're very cheap, you wouldn't have a product that you could sell. But all things being equal is the key word there. Like if you could get the same output but spend less, obviously you would do that. So we spent a bunch extra. So there's a big amount. We got to drill down to why. Why might we have spent more on labor costs? Just why might a company spend more than expected on labor costs? Yeah. Overtime. Overtime's a good one. Yeah, that's because you got to pay extra for people to stay longer. Okay? Why else might we spend more than we expected on labor costs? A company, any company. Yeah. Hiring skilled workers. Yeah. Maybe the skill has become more scarce than when we built the budget. And so their wage for the skilled workers has gone up. Maybe the difficulty of what we're doing has gone up. And so we're hiring more skilled workers versus unskilled workers. We have a higher proportion of people who have to have higher training. And so it's going to cost more overall. Okay. What other thoughts do we have? Why might you spend more than you thought on labor costs? Yeah. Higher turnover. So that affects it in two ways. One, you have to pay onboarding and training these people, and they could be golden new employees. They're still not going to be as productive as somebody who's been around for a few years. So you're going to have to pay for more hours of time from those less productive, less trained people to do the same amount of work of somebody who's been there a while. High turnover has lots of costs. Yes, exactly. Good. Also, if you're in a smaller market, a labor market like local market, the higher turnover you have, the more you get a reputation as having high turnover, and so the more people are going to require a premium in wages before they accept a job with you, because they know it's going to be hard, it's not going to be likable. They heard from their friend it's a terrible workplace or whatever. Lots of costs that get associated with this. Okay, good ones. Any other ones you want to share? These are good ones, and I'm sure we haven't exhausted reasons why you might. Okay. Well, we said three or four different reasons why. We have at least 3 or 4 different things we should do to fix it. From each, depending on which reason it was, or which of the reasons it was, they call for very different courses of action. We might have very different things we're doing when we call up the person and say, "Hey, labor manager, operations manager, fix this. This is bad. Do better." When we say that, what's that person going to do? The person's going to have to drill down and say specifically, what is the real root cause? What is causing this? Of the different possibilities, what's going to cause it? And so that is why it's broken down the way it is in variance analysis, because you want to be able to disentangle. We love that word in academic papers. It sounds so cool. Disentangle. Just throw that out there if you ever want to impress somebody. I'm just trying to disentangle how much of my order was messed up based on the fast food microphone versus your incompetence. It's a good way to get something thrown in your face if you do that. But otherwise, you can impress with disentangle. So the idea is an entanglement, like there's like multiple reasons that are like tangled together, and you're like disentangle them. You're undoing that. You're stripping them out to get the core set up. And this amount of the $2 million was due to this, so we should fix this. This amount of $2 million was due to this, so we should fix that, and so on and so forth. Yeah, we love that. We love that phrase. And we do love that phrase. We use it a lot, or certain among us use it a lot, because it's what we do in science. Let me tell you, this experiment. Let's see, which one should I describe? So I am primarily an experimentalist. So I design behavioral experiments, and I give one group of people. I do research on people. Oh man, it's frightening. I ruined so many lives. I give one group of people like one version of the experiment, and another group of the people a different version of the experiment, and then I compare how well they did on whatever it is I'm measuring, whatever output they're supposed to produce. I compare. So let's say, for example, all right, the one experiment they did is about a strategy map and giving feedback about the firm's strategy. Okay, you don't really need to know what a strategy map is. Anybody heard of that before? I see some nods, but I don't see any raised hands. It's okay. All right, so a strategy map is just one of the ways you could present a strategy. At least that's all I was concerned with in my experiment. I said, well, you could present the strategy as a series of unrelated goals, just bullet point goals, but we're going to do this, also we're going to do this, also we're going to do this. Like 4 is a good number. That's what I did in the experiment. Or you could present it as a series of connected goals. We're going to do this, which will lead to us also being able to do this, which leads to us also being able to do this, which leads to us also being able to do this. Like draw arrows between the goals, which is what a strategy map does. It draws arrows between the goals and says, this will help cause, this one goal will help cause us to achieve the next goal in the list, which will help achieve the next goal in the list, which will help us achieve the ultimate goal of whatever the end goal is, usually a financial goal. Okay, so I was playing between, well, what difference does it make when I give people a strategy map versus not giving them a strategy map? And are they more or less likely to report to the CEO if they're like the people play the role of a middle manager in this experiment that I put them through? That's the race, the maze that I was putting the lab rats through. Are they likely to report to the CEO some negative feedback about the strategy that they received from a subordinate? Some subordinate says, you know what, we have this goal, but like it's not really the right goal, or there's something wrong with it, or it's not achievable, or it conflicts with another goal. So I created some feedback that was coming up that was negative. If I give them a strategy map, they're more likely or less likely than when they don't get a strategy map to report up to the CEO. Riveting stuff. I know. You all want to know how it turned out. Don't worry. Just we'll feed you later. But I had to be very careful in how I designed this. I couldn't give one group the experiment and give them a strategy map and make it all bolded and underlined and make it in super cool speech with like words like disentangled and make it put my picture on there and a dog video. And then the other group, I don't give them a strategy map and I make it in sans serif font and it's lowercase and I don't have my picture and I don't have a dog video or whatever. And then say, well, clearly the difference between group A and group B is because of the strategy map. No, I've varied like 5 or 6 different things between the groups. I have to isolate one thing only. Sorry, just watched Hunt for Electopia. I was about to say one ping only, Vasily. One thing only. I need one lever I'm pulling between these two. Just the strategy map. Everything else in the experiment has to be held constant. This group has to have the same experiment set before them, same instructions, same everything they're doing, just they get a strategy map. This group is doing the same thing, they just don't get a strategy map. And then I'm able to say, the difference between group A and group B, I can attribute to the one lever I pulled between them. And that is the entirety of what we do in these variances. When we get the variances, we want to only have one difference between what we're comparing, the more expected thing, more budgeted thing, and the more actual thing. So the pattern of these little mountain ranges that I build throughout this chapter are that we start in dreamland. The furthest in dreamland we start in the far right. Most expected, most budgeted, most standard. I'm going to use those 3 interchangeably because they mean the same thing. Standard is how you build up an expectation. I have a standard of $1 per direct materials unit. I have a standard of using 2 direct materials unit per finished goods unit. That's the standard. That's my expectation. And I'm going to build a budget based on that. That's how you build a budget. This is the most hypothetical, the most in my mind. And then one by one, I'm going to relax the budgeted to an actual. So here I've just changed the quantity. Budgeted quantity times budgeted price gives me the budgeted amount over here on the far right. And the flexible budget is our actual quantity times budgeted price in the middle. So the only lever I've flipped is quantity. So this volume variance has to be due to quantity. The variance between our actual quantity and our expected quantity. And then we go one more. We have actual quantity. That's held constant between these two. The only lever we're pulling is the price. We will have a budgeted price over here. We have an actual price over here. So the difference between these two right here has to be the price. We have one lever we're pulling only. When you are building variances that don't follow this paradigm, that aren't the traditional ones that you have to build on your own, make sure you are very carefully only pulling one lever, if at all possible. And if you're not, there are ways you could potentially get around that. Usually involve fun statistics, controlling for covariates and such like that. Okay, so that's the basic paradigm. That's the theory that we're going to go into with this. And I'm going to skip over revenue variances because they're not really important right now. Don't tell them. And I'm going to go to here. This is the real ticket. All right, so when I have the two italicized names in the box, that means they're multiplied by each other. So the static budget is what we did last year when we said, how much are we going to spend on whatever the cost category is. So we're talking about cost variances, and that's what we spend most of the time. In fact, module 9, that's what it is, right? Yeah, module 9 is all about cost variances, direct materials and direct labor cost variances. We have 3 different variances we might pull out. And really, I'm only going to ask you about 2 of them. The quantity and the price variance. But you will get tripped up if you do not pull out the volume variance or effectively pull it out. So the static budget, like I said, the far right is what we put in the actual budget when we did it last September. So you do an annual budget, usually complete that a few months before the end of the year. So last September, we went to negotiations. We talked about, well, we expect to do 10,000 units of volume this year. We expect there to be 2 units of 2 pounds of direct materials input per unit of volume. So that means 20,000 units of direct materials, 20,000 pounds of direct materials goes into, that's our expectation. And we expect them to be at $10 a pound. So that's $200,000 is our direct materials cost budgeted. That's a static budget we figured out last year, usually before the end of the year sometime. The flexible budget, oh look, it also says budgeted quantity, but there's this little asterisk right here. What that means is the budgeted quantity if we knew the actual volume. So the dumb little example I use is I say, imagine you got really smart. No, you are smart as you are, right? You're smart enough, you create a time machine, which I expect all of you to do. You decide that the most important use of this time machine is to go back to September and whisper to yourself, actual volume will be 15,000, and then poop back to the present. That would be a good use of the time machine, right? It's like the best thing you could do. That should have been the plot of Avengers Endgame. But they didn't listen to me. So that's what flexible budget is. The budgeted quantity of direct materials units, in this case, is my little example, if we knew what the actual production of finished goods units was going to be. So I told you, here's the little verbally I said this. We expect 10,000 units of volume, meaning 10,000 finished goods units. Our standard is 2 DM units per finished goods unit. That's one of our standards. So we expected 20,000 direct materials units. But that was last year. That's September maybe. I mean, sometimes these static budgets are a good time before the end of the year. What if the time machine person came back and said, it's not going to be 10,000, it's going to be 15,000. Oh, okay. Well, if we had that information, we would have budgeted 15,000 and now 30,000 direct materials units. So the flexible budget, this is our flexible budget amount, versus the 20,000 static budget amount gives us 10,000 DM units. This is terrible handwriting. I know. We now expect to use 10,000 more, so technically that's unfavorable, units based on that information. And that is the volume variance, times whatever price would give us a dollar amount. All these are in dollar amounts. Each square, when you get to the rectangle, right, each rectangle will be a dollar amount we're talking about. Just whatever the cost it was. So what I say? I said like $10 per direct material unit. I said that I think. So it'd be $100,000 in that case, difference if it was $10. That's the DM volume variance. $100,000 unfavorable. We now expect to spend, because of that extra information, because we know finished goods units is 15,000, the actual finished goods unit production is 15,000 instead of what we expected is 10,000, which was 10,000. That's an increase in $100,000 in our direct materials budget. Okay, that's great. That's volume variance. And we're almost out of time, but let me just tell you why that's important. Not because I'm going to ask you a question about that, but because you're going to be tempted by the static budget. Like, I've never been tempted by a static budget. You will be. Trust me. They're very convincing. What you'll be tempted to do is to calculate quantity variance by comparing this to this. Don't do that. You've flipped two levers. You've taken budgeted quantity at what we thought actual production was going to be back in September compared to actual quantity at the actual amount of volume this year. So not only how much direct materials were used, but also at the actual finished goods quantity. And you have a mishmash of quantity and volume variance. What that means is when you get on the phone with a person and you're like, hey, fix this, they can be like, we did extra volume this time. See, it's not my fault. I went into Cartman. I don't know what I did there. It's not. And so they can wriggle out of it. They can get out of, you haven't properly disentangled. You don't have just one lever you're pulling. So people can escape responsibility. And okay, be less cynical about it. You won't be able to track root causes and improve profitability next time because you don't know why it happened. You don't know for sure whether we just had higher volume and so direct materials price or costs went up, or because, the person on the floor doing direct materials management, whoever the manager is over that, didn't manage the direct materials very well. So a bunch of it ended up being scrap. They left it out in the yard. It got rained on, whatever it is. We can't fix that problem because we don't know that it's the cause. And that's the end. So let's stop there. We'll come back, talk more about how the nuts and bolts of doing this, reviewing it for a lot of you. Also, we'll talk about journal entries for it, how it gets recorded in the journal entries. That's one of the big contributions of this module. A lot of you didn't cover that in the intro managerial class.